All right, welcome. Let's get started. Welcome to this webinar called Predicting Judicial Decision Making with Machine Learning. I'm your host, Ben Alarie. I am the co-founder and CEO of Blue Jay Legal. I also hold the Osler Chair in Business Law at the University of Toronto, and where I teach tax law and spend a lot of time looking at income tax, international tax issues, a little bit on GST, HST issues, and really excited to welcome everybody to our webinar series continuation. Today, we are focusing on the question of whether provision of a certain financial service constitutes an exempt financial service for the purposes of the Excise Tax Act. And where this really becomes an issue is where you have services that might be characterized as being exempt financial services or not, because the tax consequences can be really quite significantly different depending on how you answer that question. And a lot of times there are gray areas that emerge around whether to characterize a particular provision of services as exempt or non-exempt. So what we're going to do is, as with the other webinars, we're going to talk a little bit about the background to give you some insight into what it is that we really think about when we are looking at tax law and using technology in tax law, more specifically machine learning. So to provide some of the backdrop, some of the context around how is it that we're thinking about this, how are we approaching this issue of using machine learning and AI in tax law. From there, we will jump into some of the specific values that you can generate using this kind of software in your practice. So going from a contextual kind of theoretical perspective, then jump into kind of the more practical, why would you use this? How would you use this? And then we're going to become super concrete and tactical, and we're going to look at a specific case that was decided just a few weeks ago, actually, by the Tax Court of Canada. We're going to look at the facts of a case called Bar. And, you know, it's a bit of a stylized version of Bar, but we'll look at the facts of the Bar case. And then we will use the Tax Foresight technology, use the exempt financial services classifier to figure out how you might have looked at the Bar case prior to it being decided, and get a sense of what it is likely that the court would say in that case. So let's kick this off. So basically, when we think about how technology is influencing tax research, you can think about it from a very long-term perspective. And this very long-term perspective kind of starts pre-1970s with all the analog legal research services that were available back then. So books, journals, reporters, various loose leaf publications, everything that would have been a fixture of a tax library or a law library up until, now or very recently. A lot of firms are dismantling their physical libraries and actually dramatically cutting back on what they hold in analog physical format, just because it's so expensive to carry all those materials and to occupy that space, when the reality is almost everyone has made the shift from analog materials to digital materials. And digital research materials are awesome. They've been around since the early 1970s. They continue to develop and get much better. What characterizes digital research materials, of course, is they're on a computer. You can access them over the internet. Increasingly, they're based in the cloud. And what's awesome about it is when you use particular materials, you're not excluding anyone else from using the same materials at the same time. You can do keyword searches. You can find materials very quickly using the methods that we have all grown to love and use on a daily basis. Now, one thing that we are seeing and that we're part of is the shift from digital research methods into computational legal methods. So this is very different, but it is a natural outgrowth of the digital methodology. And so instead of doing what digital has done to analog, so digital basically has replaced screens with paper. So we take take paper, replace it with an LCD screen or a CRT screen if you're old school, and you've basically taken the words from the page and put them on a monitor. Of course, you can also print them out and get it back on paper. But the move to computational does something very different. So it leverages the fact that we've got all of this information in digital format. It's available online. You can find it. You can access it through a computer, through the net. And basically says, okay, so we've got the materials available digitally. We've also got new algorithms. We've got deep learning algorithms. We've got the improvement in a whole bunch of the data science piece of the puzzle from a computer science perspective. And now we've got increasingly powerful computing resources available to basically process that digital information. So we've got much more digital data. We've got all the judgments that are online, their data. We've got the statutes online, their data. We've got the regulations online, their data. We've got various rulings from the CRA, from others available online. They can be treated as data. We've got all these rich sources of digital data. We've got these algorithms, which are basically just formulas for figuring out how to synthesize these materials. But the key ingredient that we now are seeing is that we've got tons of computing power that you can bring to bear on this data and these formulas, these recipes for analyzing these different forms of data to make predictions about what courts would do in new situations. So this is what's happening. We've gone from dead trees, right? The dead tree technology, analog to digital, so silicon-based stuff. Now we're moving into the computational realm, which is really an outgrowth of that digital move. But instead of replicating the words on the page on the screen, we're actually going through and we can derive greater insight into what the law would require based on mountains of information that would be very, very difficult for you to read and just confront in a digital format from your screen. So you don't want to read everything. What you want to read are just the right things, and to make sure that you're asking the right questions. That's what we can do with these computational legal methods. Okay, so in the past, I think mostly everyone will be familiar with analog legal research methods. Let's suppose you had a new case, a new client come in and see you and say, tax accountant, tax lawyer, I need your advice. Here's the situation. Describe the situation. You might be able to, as an expert, you'd probably be able to identify the issue very quickly. You'd say, you have an issue about whether or not this is an exempt financial service or not. Should you be collecting GST, HST in these circumstances? Let me check. And so in this analog world of the past, of the 90s, say, you'd go to the law library or go to the tax library and grab all the volumes that appear to be relevant. So some might be commentary, some might be cases. You'd read through as many cases as you can find, the statutes, the regulations, and you put together a memo. If there's enough money at stake, you'd invest a lot of time in this to make sure that you cover off as much of the research as you can in an analog way, and then kind of monitor developments in the law. So you put together this memo, run it past different folks at the firm, just double check. And are you guys aware of anything that might change the situation, that might make this different? Have you seen anything in the, any reference to this in any like physical newsletters that you may have received, or any commentary, any conferences, that sort of thing? In the digital world, the process is pretty similar, but you'd log in to a tax research service such as TaxNet Pro, and you'd go in and you'd start your keyword search. So you'd be searching by keyword. You'd very quickly probably find things more quickly, and you can search a vast library, a trove of things that would be unlikely that you would have access in an analog world to in a physical format, unless you have an exceptionally well stocked tax library. So you wouldn't have that typically in an analog world, but in the digital world, that's actually totally realistic. It's quite realistic to have access to almost all the relevant tax information. But then you'd go through the usual methodology of kind of reading all of those materials that seem germane, collecting the right questions, collecting information from the client, putting together a draft memo, and proceeding from there. Now, in this computational method of doing the research, things become a little bit different. So And we're going to run through an example. So I know this seems a little bit maybe abstract at this point, but what we're going to do is run through a scenario. We'll choose the classifier that addresses the legal issue, which in this case is whether or not a particular service constituted an exempt financial service for GST, HST purposes. We'll run through the set of questions that courts would look to in deciding on the proper characterization of this service. What you'll see is that the system automatically generates an explanatory memo and will identify a list of very similar cases that we should spend time analyzing and making sure that we understand how our facts in particular relate to the facts of these other cases and the way in which these other cases have been decided. And it's going to return these cases automatically. And so it's the power of this computational turn in the changing methodology of research. It's really, really fascinating to see, because it turns the whole research process on its head. So it starts with you identifying the issues, and then it basically steps you through all the most important questions that you would need to ask the client, the kinds of things that courts are attending to in deciding these kinds of cases. So it puts you in the position of being this learned intermediary between a mountain of case law and the client. And so you can become that pivot, that linchpin, that essential piece here, where you're actually collecting the information in an expert way, packaging it, presenting it to the system, which is then able to process all of that information and kick you back a really strong answer, which is then your starting point for doing the more strategic and thoughtful parts of the analysis. So how do I differentiate or distinguish those cases that I don't really like, or can I use the cases that I particularly do like the way that they've gone as a resource for mining additional arguments that I might be able to make to support my position? Or do I need to go back to the client and say, okay, what we need to do is change your expectations about how this is going to go, because maybe the client has a certain idea about what the law requires. Maybe it's just completely out of step with what the law actually does require. So maybe it's beyond help. Maybe you have to go back and do some work on assessing the expectations. But it really does put you in this position of being strategically expert and being able to leverage your particular expertise, being fluent with what the law requires and interacting with a computational system like Tax Foresight. And on the other hand, knowing your clients and knowing what they need, what their interests are. And so you become that really important linchpin in this process. And it's by doing right by your client and leveraging all of the technology available at your disposal to become a really, really extremely valuable guide to your client. Okay, so and that's what we hear from the folks who are using Tax Foresight already. We've got several dozen organizations signed up using Tax Foresight all the time. What they say is it really allows them to produce the highest quality advice. So they use it just as I've described on the previous slide. So they use it to basically identify the best answer given mountains and mountains of information. They're able to work through, synthesize it in ways that they just couldn't before, because nobody has the time and the clients don't have the money to pay for endless research that would take to actually work through all of the available precedents. So this allows those lawyers and those accountants to actually target just precisely the right materials to spend their time on, to make sure that the time that they're spending on research is the highest margin possible time that they could be spending for the benefit of the client. So it's really in the client's best interest that our customers are using Tax Foresight at the moment. And relatedly, they can conduct smarter, more efficient research. It speeds things up very, very much, and allows them to focus their attention on just the right thing. So the ultimate work product, the research work product, is better, and they get there faster and more efficiently using Tax Foresight. One thing that clients say or customers say is that it really allows them to be more precise about what the risks are, what the various vulnerabilities are in a particular tax position by doing a bunch of scenario testing. So one aspect of this is you can basically do an analysis, run through it, and then go back and change different questions, respond to different checklist items in a different way and see what influence that has on the predicted result based on all of the case law. So you can do that kind of scenario testing, that iterating, that's so valuable in getting insight into how things actually work. So you can actually play with the facts and do the sort of thing that we also do in law schools as law professors. Is when we're talking about cases, we will introduce the facts, introduce the legal reasoning, the posture adopted by the judge, and then we will often play with the facts. We call them hypotheticals. We'll say, hypothetically, what would happen, do you think, if this were different or that were different? And then we have a class discussion about, okay, so if that happened, then this other thing might happen. Or which direction do you think that would actually move the court? Maybe it would make no difference, but it's important to have those conversations. The cool thing about this computational technology in Tax Foresight is you can get very, very rapid feedback about what different changes to the facts might actually lead to if it were to go to court. And so you can do scenario testing, get a sense of just how robust the predictions are coming out of the software, and see what authorities are being presented by the system as the ones that are most relevant as the facts change. So as you change the facts, the system's going to give you potentially a very different outcome and potentially give you a different set of cases to look at. And that's because there are tons of decided cases, all with different variations of the facts. The power of the system comes from being able to bring all of those cases together and fit a whole bunch of patterns to those cases and understand what's really motivating different outcomes for the courts in those cases. So really, really powerful stuff. We're going to get into it. Being able to be quite precise to a client about, okay, you've got a strong case, for example. You've got a very strong case. The vulnerability, if we have one, is this. I think we should address this vulnerability by doing X, Y, and Z. That can be very, very powerful. So knowing that from the outset is a great way to ensure that your client's interests are protected. If questions do come up on audit sometime into the future, you can say, yes, we did an analysis before we went down this path of taking this characterization as a filing position. We actually did an analysis, and here's the report, and I'll show you how to generate a report from Tax Foresight. Lots of our customers are, as a routine matter, preparing these reports, adding them to a client's file, just in case sometime down the road, a particular position ends up being challenged by the CRA or by the Department of Justice or wherever. If it ends up in court at some point, you've got that backup. You're able to say, hey, we looked at this, we analyzed this. This is the best. This was the best understanding of the law at the time that we took that position. And so even if the tax authorities don't accept that position, it should at least show that you've been duly diligent as a tax advisor, as a taxpayer. You did your homework, and oftentimes what we're seeing is that it can actually move the conversation on to other issues in an audit, for example, because the position is well documented, it's well understood. It's like, okay, that's not an issue in this case. Maybe it's something else, and so the auditors will sometimes move on. So that's actually something that's already happening. Totally fascinating. And clients like it too. Clients want to know, what are their exposures, what are their tax risks, what are their what's the potential worst case, how likely is that to come up, and so on. Finally, what we hear is that it allows folks to essentially ensure the independence of their analysis. So one of the cool things about Tax Foresight is, regardless of whether you're a government side user or you are a private taxpayer user, you're going to get the same answer. So you present the same facts to the system, the same set of responses, you're going to get the same answer. What we know as tax professionals is so often there's a bit of a wedge or a bit of a gap, a bid-ask spread between what I might see as a private tax advisor when I'm advising a client and versus what the government might see, and vice versa, right? So we might actually agree. There are tons of cases where there's an agreed statement of facts, and then there's questions about what's the proper characterization or what's the right tax treatment given that agreed statement of facts. The cool thing is about Tax Foresight, if you have an agreed set of facts, then you actually are going to get the same answer. So it's reliable, it's repeatable, and you can imagine this being very, very useful in different settings. If you're a private firm and you have your big private firm, you can imagine this being very, very valuable. If you have multiple people working on the same sorts of issues across the country, having the same technology available to drive to the same results time after time after time, a repeatable process is very, very valuable, right? Think Six Sigma. You're going to get the same outcome regardless of who's doing the deep tax research on a file. Same thing for government. In the event that the government is looking at taxpayer situation, regardless of whether that government auditor is based in Moose Jaw or in Saskatoon or in St. John's, New Brunswick, or St. John, New Brunswick, or St. John's, Newfoundland, or Toronto, or Vancouver, or Montreal, or Quebec City, wherever this auditor is. If they're using the system, they're going to get the same answer every single time if they answer the questions in the same way. And so it allows you to get an independent take based on all the case law. It's kind of like asking the audience. If you remember the show Who Wants to Be a Millionaire, it's kind of like asking the audience and getting a poll from all the judges who have ever decided these cases in the past. And the audience is going to answer the question the same regardless of who's asking. Okay, so that's kind of some of the more contextual theory, then the more practical kind of theory and the practical experience using this as a general matter on the ground. Now let's move another layer down in terms of concreteness, and let's look at this from the perspective of a very specific question. So let's look at the exempt financial services classifier, and the research question for this classifier is this. So in this particular instance, does an intermediary service constitute arranging for a financial service under a particular section of the Excise Tax Act, such as an exempt or zero-rated supply for GST, HST purposes? So let's look at this very, very specific example before moving into the actual software and getting into a hands-on exercise of how we might address the situation in actual practice using Tax Foresight. So what's going on in this case? So this is based on a real case. It's a case called Barr. It was just decided by Justice Pizzatelli, I believe, on May 3rd of 2018, so just a few weeks ago. And what was going on here is there was a shareholder of a company, is a sole shareholder of a company, who was looking for a buyer for a business that was carried on by that company. So small business, private business, trying to find the right buyer for the business. On the stylized version of the facts, there's a single broker. I think in practice, there were a couple brokers approached by the shareholder to say, can you please find a buyer for the business? And the evidence was, and this was accepted by Justice Pizzatelli, that essentially the shareholder was looking for a deal to unload the business, wasn't particularly committed to this idea of doing a sale of shares. It could also be an asset sale or some other kind of arrangement, maybe just selling some of the assets, maybe some of the intangible assets. I think the facts of the case involved some licenses that the company used in operating its business, and so it might transfer some of the licenses, or it might transfer all of the assets of the company, or it might just purchase the shares. So those would have been the ways in which the business owner, the shareholder, was able to divest himself of the business. Anyway, these brokers were approached. The brokers had no authority to enter into the contracts on behalf of the registrant or to bind him in any way. So it wasn't that they were necessarily going to enter into contracts on the shareholder's behalf, and they weren't entitled to hire and instruct counsel or see the transaction through to its end. Instead, ultimately, what they were trying to do is serve in a matchmaking function. So it was really, they were finding the right buyer or buyers for the business, leading the seller and the buyers together, put them in touch with each other, and make the deal, help facilitate the match that way, help facilitate the deal. But they didn't really get too involved in negotiating or committing the seller or the buyer to the particular deal. So they really were serving in an intermediary role for sure, in bringing together the vendor and the purchaser of the business. Okay, so the brokers, as I mentioned, had no control over whether a final and binding agreement could be executed and closed. That was really up to the shareholder and the ultimate purchaser. So the broker did find a buyer who ultimately purchased the shares. So what happened here was, in fact, the most attractive way to proceed with this particular transaction was to do a share sale. So there was a deal that was negotiated, and the buyers actually ended up buying the shares of the shareholder. And the registrant here was the person who ultimately paid, or paid the tax to the intermediaries. The registrant paid the broker's commission plus the applicable GST, HST at 12% on that. So we're talking about a big chunk of money. So it ended up being, I think, over $200,000 worth of GST, HST here. And then the registrant turned around and applied for a refund of the GST, HST paid on the commission. Why? Well, because the services of the broker in the minds of the registrant constitute an exempt supply of financial services. So the position of the shareholder was, well, yes, we've paid the commission, we've paid this GST, HST, but really the services provided to us should be an exempt financial service. We shouldn't actually have to pay that. And so they basically asked for a refund of that amount. And in the case, there's no question that they followed the right protocol. If that characterization was correct, then they should be entitled to a refund of that GST, HST that was paid. So more specifically, they're claiming that the broker had supplied a financial service under paragraph 123(1)(d) of the Excise Tax Act that was an operation in respect of a financial instrument, such as an issue or transfer. The minister, the reason why this gets to court is there's a disagreement between the Minister of National Revenue and the taxpayer, and the minister denies the refund of the tax that was paid here, and so the registrant appealed to the Tax Court of Canada. So this is where we can kind of get into the situation, use Tax Foresight, figure out how Tax Foresight might analyze this kind of situation. So now I'm going to open up Tax Foresight. I'm going to maximize it here. Okay, so this is Tax Foresight. This is what you would see if you were a user. You can log in, check it out. A whole bunch of different functionalities here available for us to use, a whole bunch of different tax questions, characterization questions that the software can analyze for us. We can see a few different things here at a glance. We can see that there's under exempt financial services, there's a classifier, which is going to allow us to predict outcomes based on previous cases. We can see that there's a case finder that's going to help us locate cases that are relevant to the facts that we're confronting here for our taxpayer. And case analytics, which is a cool way to visualize the different aspects, the different proclivities of the courts and analyzing cases with different features. So I think what we're going to do is start with the classifier, go through the classifier, think about how the classifier might inform how we approach this particular question. In this case, are those services provided by the brokers exempt financial services or not, on the basis of whether or not they constitute arranging for a financial service. And then we can move into the case finder, poke around in the case finder, see what that will show us, see how that works. And then we can move into a little bit of case analytics. And this kind of represents the range of things that you can do using computational legal methods in tax research. The classifier is going to make a very clear prediction based on the way that we answer these cases. And then we can do the scenario testing that I talked about earlier. The case finder is more of a search kind of tool, so it can help us find and filter through the cases that have those aspects on the merits that are most relevant to our situation. And the case analytics is just a way to visualize what we'll find in case finder. So it's a different way of approaching case finder and synthesizing across the cases that we find using case finder. So let's do that, let's just jump right into the classifier. Okay, so a few different things to notice right away. So this is going to help us decide whether or not a court would likely say that an intermediary service related to a financial service should be arranging for the financial service under the Excise Tax Act. And so we see a bunch of information around that. And then we see sometimes one of the issues that arises here is that you may have a number of different supplies that are being provided in close proximity to each other in a related way from one provider to one recipient. Sometimes in those circumstances, you get questions about whether something's a single supply or a multiple supply. That often happens with respect to financial services. If you have that kind of issue, you can use the single versus multiple supply classifier, which we also have on Tax Foresight. If I click on that link, that would take us to that single versus multiple supply classifier. We don't have that issue here, so I'm not going to do that. But you should know if you have that issue, you can use these two classifiers in conjunction with each other. It's very powerful in getting insight into the case. So when I click next, we're going to see that we're jumping right into the questions, the questionnaire. So we see on the left-hand menu here, we have a number of different topics that are going to be posed to us in the course of this interview. So essentially now the software, the classifier, is interviewing us. What is the nature of this case? What's going on? What is the nature of the intermediary service that we're actually looking at here? So some questions around the substance of the supply, some questions about the supplier of the service, so that'll be about the brokers, some questions about the end provider and the end recipient, so about the buyer and the purchaser, the vendor and the purchaser of these shares here, and then the relationship between the supplier and provider and end recipient. So what this is doing is it's collecting all this contextual information that courts would normally look to in deciding whether something should be considered to be an exempt financial service for the purposes of the Excise Tax Act here. Okay, so essentially what we need to do is answer these questions in order. So some of these early questions are really quite long because we're really trying to figure out what is exactly at issue here. So this first question asks, what is the end financial service the taxpayer is trying to arrange? The end financial service must be one that's permitted by paragraphs in subsection 123.1. So essentially, the end financial service is an operation in respect of a financial instrument, such as the issue or transfer, as described in the section. Because what the end financial service is the transfer of shares from the owner of the shares, the shareholder who owns the shares, to the purchaser of the shares. So it's really an operation in respect of a financial instrument. Okay, is the end financial service any of the following as set out in paragraphs N through T of subsection 123.1? So we can work through here. I've already worked through this earlier, and I know that it's none of the above here. In the case, there is some question about whether it might be a service that's merely facilitatory or preparatory to a financial service, such as document processing or information collection. So what we see Justice Pizzatelli do in the case is say, well, there is some suggestion there, but he doesn't decide it on this basis. So we can come back and change this at the end, but let's take this case kind of head on about these brokers who are basically performing this matchmaking service as between the vendor and the purchaser of these shares. Okay, 1.3, after receiving the intermediary service, does the end provider have to receive or undertake a further service or assessment before deciding to complete a contract for the end financial service? Yeah, absolutely, that's true, because these brokers are not actually doing the full stack of services necessary to transfer the shares. They're basically putting the vendor and the purchaser or potential purchaser in contact with each other and allowing them to consummate the deal. So it's really that matchmaking service that's happening here. So the end provider really does have to do more work to make this happen. Okay, Supplier. So who's the supplier here? We're talking about the supply of these intermediary matchmaking services here. So who is it? Well, it's not an insurance supplier, not a banking, not trustee services, not wholesale or retail trade. Really is sales. So this is really a sales making function. It's not accounting or legal advice. It's not IT. It's not office management. None of these things. So the best match is sales, including renting and leasing property. If I'm unclear at any time about what these questions are asking, I can just hover over this little information dot here. And it says if the supplier has more than one business, select the one on which the supplier depends most for income. So here, it really is sales, including renting and leasing property. Okay. Does the supplier or its workers have specific training or expertise relating to the end financial service? Yeah, absolutely. So these brokers are specialized in matchmaking buyers and sellers of businesses. And so, yeah, they do have expertise relating to how businesses get bought and sold by various players in the market. That's why they are effective brokers, because they understand the interests of buyers, they understand the interests of the sellers, and they're able to basically put them together, bring them together because of their expertise in the area. So here I would say yes. Is the supplier providing the use of its own equipment, technology, or research as part of the intermediary service? Yeah, for sure. So for sure they're research. So these brokers are being hired because the seller doesn't know where to begin or isn't comfortable engaging in the effort to find the right kind of buyer for the business. And so what the supplier is doing is going out and using their own technology, their own lists, their own methodology for finding buyers for the business that the seller wants to part with. And so, yes, the supplier is providing its own technology or research as part of its service. Does the supplier have ultimate control over the process of providing the intermediary service? Yes, absolutely. So the supplier does have control over the process of providing the intermediary service here, because the broker has been hired and tasked with, okay, can you find me a buyer for the business? The brokers go out into the world, do what they do with their technology, with their research, thinking about it, beat the bushes, call people, work their networks, and they do ultimately find a buyer for the shares here. So yes, they do have control over their process, how they actually deliver the service. Now we can click next. Okay. Now we're getting into questions around the end provider and the end recipient of the financial service. So what best describes the end provider of the financial service? I think here it's really none of the above. So we're talking about the financial service of actually transferring the shares from the shareholder through to the buyer. And that's none of the above. It just actually, it isn't. It's the shareholder transferring the shares. Are the majority or all of the end recipients of the financial service individuals? No, we've got corporations here involved. We're talking about a business and shares of a business being sold to someone else. So we're not talking about individuals who are, kind of end-level consumers. That's not what's going on here. Okay, so the answer there is no. Okay, now we get into some questions about the relationship between the supplier and the end provider and the end recipient. So here we get into how integrated this is. Are the supplier and the end provider in a joint venture or partnership relationship with respect to the provision of the end financial service? No, not in this circumstance. For the end recipient, what's the primary effect of using the intermediary service? So here I think we can see some of the power of doing some scenario testing. So I think looking at this, my first best answer to this question based on the facts as we were presented them is matching with the end financial service, matching with the end financial that best meets the end recipient's needs. So, the broker finds this end recipient who wants to buy the shares in this company. So basically brings together, does this matchmaking thing. And so it's all about matching the financial service that best meets the needs of both the seller and the buyer of the shares. And so I might characterize them both as the end recipient of the service. And so they're bringing these parties together, and it's all about matching them with what they actually want to do and need to do. I might say none of the above. If I were forced to select one of the other options, I think I might say the first one, so faster or less expensive receipt of the end financial service. So this would presuppose, though, that we actually know who the buyer and the seller are going to be of these shares. We don't know that. The whole purpose of using the intermediary service is to perform that matching function. So it's about matching the buyer and the seller in these circumstances. If we assume that that match is going to happen anyway, ultimately in the fullness of time, and the broker is just making that happen more quickly, then I could see the case for answering it with respect to that first one, faster or less expensive receipt of the end financial service. But I don't think that's the best answer here. So I think what I would do is go with my first best answer here and say, yes, it's about matchmaking. It's only secondarily going to be about a faster or less expensive receipt of the end financial service, because that's not what this intermediary service is all about, unless you assume that this deal is kind of preordained, it's going to happen, and this is just making it happen faster. So my first alternative here is matching, the answer that I've selected here. The second might be none of the above, so I might say none of the above. The third one would be faster or less expensive receipt of the end financial service. So this is where we kind of get into some questions about, well, how do we actually answer this question? I think I'm pretty confident about this. I had some conversations with some of the other folks at the company before the webinar, and I said, I think this is for sure the right answer. And they said, well, Ben, like you could argue it's none of the above, because it isn't really necessarily about the end financial service. It's really about the underlying business, right? Is it the right business for this buyer to buy, and the seller is going to sell this one business? So is it about the financial service, or is it about the actual identity of the business? And I said, okay, in that case, it's none of the above. And then someone else said, well, maybe it's the faster or less expensive receipt at the end financial service. I said, I'm not as sure. So anyway, reasonable people can disagree about how to answer this particular question in these circumstances. We're going to cycle through and do them. So at this point, you might be saying, okay, like, let's see what happens. So I'm going to click compute, make a prediction, test yourself. Let's see how well calibrated you are. This is an area of the law that's pretty tricky. This is why these cases end up in court all the time. It can be difficult to make a confident prediction, but in your own mind, come up with what you think the answer should be based on how we've answered all of these questions so far as I click compute. So as I click compute, the system's analyzing all of these cases that have previously been decided by the courts and coming up with the prediction. Okay, so here we have the prediction not arranging for a financial service. So that means that this is not an exempt financial service for the purposes of the Excise Tax Act, which means that this tax is not actually going to be refundable here to the registrant if this is the right outcome. In fact, this is what Justice Pizzatelli said. On the way that we've answered the questions, you see that it's a pretty balanced case. So you can understand why this ended up in court. It's actually kind of tricky to make a confident prediction. In this case, there's enough kind of uncertainty that makes this tricky. What you can see is the system has automatically generated an explanation about why this is the predicted outcome. So, it does acknowledge that this is a closed case, talks about the substance of the supply, the identity of the supplier, the relationship between the end provider and the end recipient, and the supplier too. So kind of goes through, analyzes this, comes up with a tailored explanation about why in this case it's saying that it's not arranging for a financial service. Then we go through and see the similar cases. So the cool thing here is that the system has gone through and analyzed all of the existing cases that have been decided on these issues and identified these as the most similar cases. We see Barr and the Queen here coming up as the second most similar case, and says not arranging exempt, not arranging financial services. But you can see, just scanning this list of the top 10 most similar cases, but there's a mix of arranging and not arranging cases. In fact, if you were just to look at this, you might say, it's very interesting that the algorithm is saying not arranging is the best prediction about this particular case, given that 7 of the top 10 most similar cases actually say that it would be arranging. So if you were just to look at a raw average of what's happening in these cases, you might say, okay, well, it looks like the right answer is that this should be exempt. But if you were to go a little bit deeper and use these machine learning algorithms, what you'd see is that actually the best prediction is that a court would tip over and say, no, this is not arranging for a financial service. So it's not just about identifying the most similar cases and doing a straight up average. This is actually cleverer than that, in that it's going through and identifying hidden patterns in the cases, including time trends. So one thing that may be going on here is some of the earlier cases, like I'm just scanning this list, and some of them are kind of old, right? So we've got this 1991 case, 87 case, and some of them are from other jurisdictions, right? So some of these are UK cases that the system is making a prediction for a Canadian court. So it might be diminishing the relevance of this UK case, for example, as compared to a Canadian case, which is Barr, and some of these UK cases, because we're trying to make a prediction for what the Canadian courts would say. So very, very interesting here. If I click on Find More Cases, it'll take us to Case Finder, and then we can explore and filter more of the cases. What I want to do next, though, is actually go back and do a few different things. So we're going to go back to question 4.2, which I talked about, and we're going to choose none of the above rather than the second item, this matchmaking thing, because it's arguable that it wasn't actually necessarily about that matchmaking with the financial service per se, but rather with the right assets or the right shares to buy. So that's arguably what's being matched. I still think the matchmaking thing is the best answer, but arguably it's none of the above. And then we'll also do, in the alternative, faster or less expensive receipt of financial service. So we'll do this. We'll recompute. We'll see how this changes the analysis. Okay, wow. So this makes it, if it's not about matching the folks with the right financial service, it actually makes it much less likely that it's arranging for a financial service. So that's really interesting. That UK case that used to be the most similar has dropped down fairly significantly here. That leaves Barr as the most similar case. We've got a different mix of cases here. And now if you look at kind of just the raw averages here, we've got 8 of these 10 cases being not arranging. We've got the overall prediction up to 87%. So the system's even more confident that it's not arranging a financial service. So totally fascinating to see. So this is a much stronger result than the one that we got when we said it was about the matchmaking. Let's go back and let's see if I'm the taxpayer at this point. I'm just not. I'm wanting to make the case that it's one of these two. Let's see what happens if I make the case that it's faster or less expensive receipt of the end financial service. I don't think this is as good an answer as this matching one, but if that's my only alternative, maybe I'm stuck with making that argument. Does that change the analysis? Okay, so I think that's a very similar result in terms of the outcome to what we had before. And again, okay, so we've changed the mix of cases here. It's a little bit less clear that it's not arranging based on the similarity of these cases, but still it looks like the best answer is not arranging. And again, a different set of cases than we saw originally with the second matchmaking kind of argument here, even though the predicted confidence is the same. Okay, so let's see. I'm going to change it back to my favorite answer, which I think is the second one. And you might remember right at the start of this conversation, I started talking about this question 1.2. So there was some discussion in the case about is it a service that's merely facilitatory or preparatory to a financial service? Here on the bar case, Justice Pizzatelli said, I don't need to answer this question. I have the answer by just characterizing what's gone on, and I think it's not arranging a financial service. And so he said, but if I were forced to answer this question, I think I would say that it was merely facilitatory. So if I click that, okay, the system's saying, okay, this is automatically, there's this deeming rule. If this does apply, then this end financial service is excluded from being a financial service by paragraph 123(1)(r)(4). The intermediary service, for that reason, cannot be considered to be arranging, even though it may share some aspects in common. So that's basically telling us that this is a foregone conclusion, that it's not arranging for a financial service. We've got a deeming rule that applies. And so in that case, there's not a whole lot to explain. So there's a deeming rule, boom, you're out of this situation, and it doesn't apply. Okay, so you see the flexibility of the system. It's good at characterizing ambiguous situations. It's also good at applying the various deeming rules that apply to the system. And you'll see we get the same prediction every time as it goes through, compares to all the other cases. So what would happen if I were to say, okay, I want to find more cases? I could either enter the case finder this way, or I could go back to the home screen and enter the case finder this way for exempt financial services. I'm just going to do it this way, hop into the case finder here and say, okay, so this is a tool to locate cases that share attributes that I'm really interested in. So let's suppose I were approaching it from this perspective, and I want to find cases. No, I'm not going to want to do that. So let's say I want to find all the cases where it's in respect of a financial instrument, such as the issue or transfer, as described in paragraph D. Okay, so now I've suddenly pulled up all these cases that involve, things that involve an operation in respect of a financial instrument. Now, what if I wanted to find all of these ones that were addressed by the Supreme Court of Canada, Federal Court of Appeal? Okay, so right now, boom, I just see right away there are only 2 cases decided, none by the Supreme Court, 2 by the Federal Court of Appeal, applying this particular paragraph. Okay, so we can see none from the Supreme Court of Canada, Federal Court of Appeal. Let's say I just want to look at the Tax Court of Canada, I can do that too. Okay. All right, I'm just going to leave that off because I'm maybe not so interested in finding all the cases by the court. What if I just say, okay, of all the cases that have ended up in court, what's the general pattern here? So one way of looking at that would be to look at these top 20 cases and count up all the arranged and not arranging and say, okay, so out of these 20, maybe it's 50-50. But if I switch to case analytics, it's going to tell me all the cases. Well, my intuition was about right. So there are 25 cases involving this particular aspect. So an operation in respect of an instrument, such as an issue or transfer. And it's basically 50-50. So 13 go arranging, 12 go not arranging. What if it's about an exchange payment issue? So that's 50-50. Okay, maintenance of an account. So I can go through and get a really good sense of how these different paragraphs have been analyzed by the courts over time. So some of them don't appear very often. Okay, a loan or advance of money, that looks like it's a more frequent thing. Okay, so just 5 cases. All of those go in favor of arranging when we're talking about credit cards or charge card voucher. That's interesting. So what if we stick to this? Okay, these are clearly the most commonly arising case. Let's see. What if we focus? Now we can do something else. So what if we just drill down and say, okay, what about these cases where it's all about sales? Okay, what if it's about insurance? In the insurance context, it's more likely to go arranging. Okay, so let's suppose that's my case. I want to see these cases, show these cases. It's going to bump us back into Case Finder, And now I can see immediately we've got 4 cases where you've got an insurance company providing services with respect to a financial instrument. And all 4 of these have gone in favor of arranging at the top. You can tell because we've got a full bar here in terms of the match. And so you can bounce back and forth between the case finder and case analytics, go back to case analytics here, and I'm right back left where I was. And so this is really, really valuable, especially when you get into the areas where we have tons of cases, where it's really, really helpful to navigate through a large body of case law. So, for example, the worker classifier is based on hundreds and hundreds of cases. A lot of these classifiers have tons of cases. Carry on business, central management control, gross negligence has hundreds and hundreds of cases, whether or not penalties apply under gross negligence. GAR has over 100 judgments applying GAR. So a lot of these things is very, very helpful to be able to drill down precisely on the kind of issue that you have and find those cases that are most relevant to your particular situation. You can play with case analytics to visualize, play with the case finder. And as we've seen, actually go through the classifier, change different aspects and do some scenario testing to see what your best argument is if you were to go through to court. Okay, so that's where we are. If you're interested in exploring Tax Foresight, what I want to invite you to do now is to email us at info@bluejaylegal.com. We've got a big team of lawyers who are able to walk you through Tax Foresight and maybe explore some of the other functionality that we weren't able to explore on this particular webinar. So you might want to see the gross negligence classifier. You might want to see the general anti-avoidance rule functionality. You might want to explore case analytics. You might want to see the work classifier. You might want to see the different functionality relating to characterization of real estate transactions. So if you're buying and selling real estate, is that on account of capital, or is that a business transaction, a venture concern in the nature of trade? We're happy to run you through any of these functionalities at your leisure, talk about how you subscribe to Tax Foresight, how to onboard you, how to work with your organization. We've got a customer success team. We'd love to tell you about the different tiers of customer success support that we can provide to your organization if you were to adopt Tax Foresight. Really happy to hold your hand and walk you through how your organization can use this. We've got dozens of organizations that are already successful with the software. So we're even becoming better at this as time goes on, how to make you successful with it as well. There is an ability to ask questions through the software. So if you have questions, I'd invite you also to ask your questions now. I may not have time to answer all the questions, but if you want to ask, go ahead and ask. Okay, I've got a question here. The question is, how does subscription to Tax Foresight work? So the way that subscribing to Tax Foresight works is we are partnering with Thomson Reuters, and Thomson Reuters does the contracting and fulfillment of orders for Tax Foresight. And one of the reasons for this is Tax Foresight and TaxNet Pro work very well together. So if I were to click on any of those links to any of the cases in Tax Foresight, it'd take me through to TaxNet Pro. And TaxNet Pro has inbound links into Tax Foresight. And we're working on building additional integrations going forward between the two products. And so we're happy to be working with Thomson Reuters on these integrations and working with them as a distribution partner in bringing Tax Foresight to market. And so if you have a sales representative from Thomson Reuters that you've been working with and know and are confident in their ability to deliver, give them a call, send them an email. If you want to explore what the software does with us before you take that step, we're happy to also liaise as well with Thomson Reuters on your behalf, help you out, get you signed up, get you successful with the product. But it's offered on an annual subscription basis. So what you do is you sign up for a year, a lot like TaxNet Pro, and you sign up for a year, and it's all you can eat. So you can use the software, do as many searches for as many people in the organization as you'd like. So it's a fixed fee subscription, and we are seeing a ton of use of the platform. So we're really excited about that. I encourage you to explore that as well. I just glanced at my phone. It's 3 o'clock on the nose. In the interest of time, I want to be respectful. I'm going to bid you adieu and say thank you for joining me for the webinar, and all the best. Have a great day.